Well, good news for homeowners this morning, maybe, as one of the big four banks is now predicting a double rate cut at next week's RBA meeting. Economists at NAB have grown increasingly confident that global instability will force the central bank to catch up. And beyond May, they predict a further 5 cuts could be in play before February of next year, saving the average borrower $526 on their monthly repayments. For more, finance expert and founder of Fortlake Asset Management, Dr. Christian Bayliss, joins us live. Good morning to you. Is a double rate cut on the cards?
I don't think it is. I'd put a 1% chance of that. I mean, obviously, one of the things we have to keep in mind now is that the RBA meets less regularly. Obviously, we used to have close to monthly meetings. Now it's sort of circa 6 weeks that they meet. So the justification could be that they want to front load some cuts because it's going to be a long time until the next meeting. But saying that, I don't think it's a high probability. I think it's a very low likelihood, and they're probably going to just do the one cut.
OK, so you've got CBA, you've got Westpac, you've got ANZ, all saying different things.
Yeah.
Why is NAB saying something so out of the park?
Well, look, the one thing that's changed a lot is that people are really squirreling away all of their pickup in real income. So what we saw over the March quarter was that no one was spending. We basically had flatline spending growth, and particularly in March itself, with all of the trade and tariff uncertainty and everything that's going on, we started to see a reduction in spending. So that's the big concern. And really what that means is that if those savings rates go up, that means people aren't spending at stores, that means unemployment ultimately goes up, and then we've got a bit of a problem. So there is a justification for definitely a cut, whether or not they need to go to an emergency level, because 50 basis points typically symbolises that there is an emergency. I don't think we're in an emergency environment just yet, but nevertheless, we definitely need more relief. We definitely need some assistance. The economy is clearly slowing and inflation is coming down, so they need to cut.
So the consensus is half a cut in May?
25 basis points, yeah.
OK, and then what for the rest of the year? I know the Treasurer was saying there could be a lot. Was that politics or is that...
Well, I think with what's ultimately happening and the way people are responding to the trade uncertainty and what's going on offshore, and also the domestic data here is clearly going in a way that's consistent with further cash rate increases. What it does mean is that we should have more cuts, but it doesn't mean that we're going to have bigger cuts. So what I would say is that whilst people were expecting the cash rate to go to maybe 3%, that might even go down a little bit lower now, given how things are cooling.
OK, 4 by the end of the year or 3?
I would say 3.
OK, we'll take you on 3. There you go. It's on tape. Thank you, Chevo.